yeah, that's what we're gonna do. Some of you might not be able to see this, but if you missed it, I just said we're going to record because I did not know that my thing only allows 100 people. So no worries, no worries at all. So we're just gonna record it. It is what it is. That'll be better anyway. All right, so we'll start over. Swing trading. This is swing trading workshop, and just for a little disclaimer, I appreciate y'all saying make sure I do that. This is not financial advice. A lot of this stuff is just my opinion, and I'm talking about what I do and my experiences. I'm not telling you got to trade the same exact way that I trade. I'm just letting you know what works for me, and hopefully you can use something to make it work for you. I'm not the best trader in the world, but I would say I'm pretty good. So gonna be sharing with you guys some things that I've learned in my 4 years of trading. I first started trading in September 2019, so about to come up on 4 years in a couple months. So I'm excited about that. I've learned a lot. I've had a lot of losses. I've had a lot of wins. Yeah, it's been a journey. So I mean, I've learned a lot. So I'm going to share that with you. And hopefully you can learn from my mistakes. I first want to start off by talking about what is swing trading. Swing trading, again, is when you're holding that option overnight, right? And I'm gonna be speaking from options terms here because I know most of us trade options. That's when you're holding it overnight. So if you buy an option at 350 and you sell it at 9:30 the next morning, it's still a swing trade. You buy an option one day and you sell it 20 days from now, it's still a swing trade. Right. So the big difference between swing trading and day trading is the time. Day trading, you're selling it within that same session. That's pretty much the big difference between swing trading and day trading, as far as the very, very basics. I do have a sort of itinerary that I want to go by. Why is it useful? Swing trading is super useful because a lot of times with swing trades, you can turn a little bit to a lot if you know what you're looking for. All right, swing trades are so powerful because you can turn a little bit of money to a lot of money if you know what you're looking for. You can turn a lot of money to a lot more money if you know what you're looking for. You can also turn a lot of money to very little money if you aren't careful and if you aren't following rules that you set for yourself. Who would swing trading be useful for? Swing trading is super useful for people that may be busy throughout the day. Like if you are like me, I'm in college. So a lot of times I be busy throughout the day because I have a grad job. I do all kinds of stuff throughout the day. If you have kids, you got working like a regular 9 to 5. Swing trading would be useful for you, because you might not be able to sit there at 9:30, from 9:30 to 10:30 or however long you want to trade and sit there and look at it. You might not have that time. So swing trading allows you that time to be able to sit back and let these things work. Whereas if you're trying to get a day trade, right, a lot of times if you get a day trade, you're getting a shorter term contract. So you don't have that time for you to be missing out on what's going on. You got to be more active when you're day trading than swing trading. We are going to talk about things to look out for when you're swing trading. So this kind of starts talking about what are the risks of swing trading. And swing trading is, I wouldn't say it's more risky, but there's a different kind of risk when you do swing trade. So when you swing trade, the types of risks you are taking are the overnight risks. So that would include news, that would include things like earnings, that would include just the overall market being bullish or bearish. That includes all of that kind of stuff like that. A rule of thumb that I like to say for people, I'd like to tell people, don't swing trade with something that you wouldn't be okay with losing at least 50% of. And the reason that I say that is because not that you want to hold something to, negative 50%, but there are going to be times, or there could possibly be times if you're trading a shorter term contract that something could happen overnight and your option could be down 40, 50% the next day. If you do more riskier swings and things like that, that's a possibility of happening, right? So those are the risks that you have to watch out for. You have to also be aware of the news, things that's going on, things such as when people have talks going on after the market closes. We already talked about, things like earnings, all that kind of stuff. That can affect your swing trades as well. All right. Now, I'm going to start kind of talk about stuff that I know y'all want to get to. I know y'all want to talk about how do you find them? What do you want to enter? How do you know how far it can go? That's kind of stuff y'all want. So that's what I'm going to give you. I'm about to share my screen in just a second, and we fixing to dive into this. Let me know whenever y'all can see my screen. Well, got a lot of people. Did not know it allowed 100. All right. I'm about to share my screen. Just let me know whenever y'all can see it. You should be able to see it in 3, 2, 1. You should be able to see. Okay. All right. I can see it. Good, good. Okay. All right. Let's see a stock that had a great swing. We're going to start by looking at a stock that was really good, and that would be Riot. Now I'm kind of going to talk about what do I like to look for on my swings. The first thing that I really want to look out for when it comes to swings is I like to use key levels, right? So what are key levels? Key levels are places on the chart that a stock has had trouble going above or below on a large time frame, right? In a large time frame, I refer to that as the daily, the daily, weekly, could be monthly if you want to go that far, but it needs to be a time frame that shows you a lot of depth, right? Because when you're swing trading, you are trying to catch a good move, right? So you are possibly trying to catch a move that can happen. Yes, this is trading view. You're trying to catch a move that can happen over, weeks or days. You're not expecting that swing move to happen in a single day, right? So you have swings that can be more risky than others. And I'm going to also show you guys how I kind of gauge what type of contracts I want to get, because there are times that I swing very risky contracts, and there are certain setups that I look for that lets me know, okay, I want to get shorter term contracts because I feel like this move can happen like very, very fast, very quickly. The first thing is first, you have to always be aware of key levels, right? And just like we said, key levels are levels on a daily, weekly, be 4 hour. But I like to really stick to the daily and the weekly. I pull up my chart and I come to this larger time frame here, and I find out where are places that the stock can struggle, right? And you find that I like to do people call it supported resistance, and that's what I started off calling it. But I really changed my term to key levels because of a stock can be a support in one area, and it can be a resistance on that same area, but in a different time. And when you're trading, all you're doing when you're doing your technical analysis, you're using past data to determine what may happen in the future, right? So like, for example, this Riot move, if you guys have been following me a little bit for a while, then you know that I kind of foreseen this whole entire move before it even broke out. I was kind of waiting on this move when it was doing all this right here. You have to always first start off by knowing your key levels. And I like to do mine off of the wicks. Not gonna really go into super detail about how how you find it and things like that, because we want to really talk about the swing trading itself. But once you come through and find your key levels, I then like to look for patterns, right? And the type of patterns that I like to see, the two patterns that show up the most and the ones that I suggest you guys learn are flag patterns and triangle patterns, or it's also called pennant patterns. Those two patterns show up the absolute most in the market, right? And how do you identify those? You can identify those patterns by looking for where did a stock have a nice run up. So we know a stock cannot go up forever and it cannot come down forever. It has to pull back. So many times when a stock runs, you're looking for that quote unquote pullback, right? So we look at, we're using this riot example right here, and we're just gonna look from this point right here. Notice that I have two key levels, and you also have a pattern. You notice patterns by looking for where is the run up, right? You're looking for run ups first. That's first what you want to look for, because really when you're trading a pattern, you're trading the pullback and the breakout. But that's what I like to do, right? So something like this right here, you have a nice run up. This is called your pole, right? You have a run up and then you have a pullback. Notice that when these things run up, they usually run up to the next level. That is super important. When things run up, a lot of times they run up to the next level. So if you look right here, you notice I have two levels. One would be at 688, one at 733. And I'm just using this stop because it was a great example, and this is a recent one that a lot of people actually was able to make money on, right? Let's see, we had a couple of questions. It's a flag, and what was the other pattern? The other pattern was called a pennant pattern. And I'm gonna show you guys an example of that too. But this first one is, we're talking about the flag first. The flag pattern is, you can see a flag pattern by seeing a run up, and then you have two lines going into the same type of direction, right? And everything, all of this is centered around like the term support and resistance kind of, right? So you have support and resistance here with these lines. But what people don't realize is that in these patterns, the bottom trend line and the top trend line are also support and resistance. So you have to take that same type of mindset when using these horizontal levels. These are also that support and resistance here. You can see this thing is just bouncing in between top line, top trend line, bottom trend line, until it breaks out. And one thing that you also want to note is that when you see flag patterns, you want to trade them in the direction from which they came. Don't try to trade a flag pattern or a bullish flag pattern to the downside. You're defeating the purpose of seeing that pattern. You want to trade a bull flag to the upside. You want to trade a bear flag to the downside. These are called continuation patterns. Flags are continuation patterns. So just like we just talked about, you want to find a run up, you want to find the pullback, right? If you guys have been following for a while, you know that I like to trade the breakouts of these patterns and of these levels. Or you might ask yourself, well, how do you know when something's breaking out? You have to use multiple things to know that a stock has a higher probability. There go that word again. There go that word that you're going to hear a lot, probability. You have to use multiple things to know that a stock has a higher probability of doing one thing than another. So I'm going to let y'all in on a little, well, it's not a secret because I always talk about it, but I'm going to talk about it in detail. Things that I like to use as confluence. Confluence is just more than one thing happening at the same time. So I like to use confluence super heavy when I'm swing trading, right? I want to see these things lining up because I know the more things that I can use that's telling me a stock is going a certain way than another, it decreases my chances of being wrong. And what you got to realize is just because you see a flag pattern doesn't mean it's going to always break out, right? Just because you see something attempting to break a level doesn't mean it's going to keep breaking out. Nothing is going to be 100%, right? And one thing I also want to tell y'all is no one thing is a strategy. Patterns is not a strategy, right? Key levels are not a strategy. None of this stuff alone is a strategy. A strategy comes from using multiple concepts to do something that makes sense to you. No one thing is a strategy, because I know a lot of people may not like the trade patterns, and that is perfectly fine. I have got into trading patterns, with my key levels, and also started to implement things like supply and demand. But what I will also tell you is that just using supply and demand is not a strategy. There are things that you have to look for, right? So I'm going to tell you guys things that you want to look for, or that things that I look for when I'm swing trading. I look for patterns. I'm looking for volume, and I'm looking how are the candlesticks forming. 3 things I'm looking for to determine if something may be a good swing trade. I'm looking for a pattern. I'm looking for how are the candles forming. I'm looking for the volume, right? All of that stuff together is super, super, super important. And typically I want to see at least 2 of those being, being broken, or being met, for to say. I want to see a pattern, and I want to see it breaking a level, right? I want to see those things coming together, because just like I said, just one thing won't give you a high probability move, right? If you can see a pattern, and you can see it breaking a level, and you can see volume, that can tell you that this move may be pretty strong. No one thing together is going to be, no one thing together is going to be a strategy. See a question right here. It says, what do you mean by how the candle is forming? That is an amazing question. So you want to see bullish candles. You want to see so when you want to see things going to the upside, you want to see either hammers, or you want to see full candles, right? You don't want to see hot wicks when you're trying to trade to the upside. When you're trading to the upside, you want to see a lot of either wicks at the bottom, or you want to see a full candle, full body candle. Those types of candles are very, very bullish. On the flip side, when things are bearish, you want to see those top wicks, or you want to see those big red candles. That is basically telling you, when you see top wicks, that's telling you that in this time period on this candle, that the buyers had the stock up to one point, and they got it, and the sellers came in and pushed it back down lower than where it came from. That's what a long top wick is telling you. And it's, opposite for the bottom wick, obviously. Okay. Kind of got off track a little bit, kind of started talking about confirmation and things like that. But yeah, I love to look for patterns, right? And you find these patterns, you look for the run up, and you find your key levels. So now let's talk about, how do you use this stuff together? Okay, how do you use things together to give you a high probability trade? Let me show you an example. Now, note that I gave you 3 things. I said you want to watch out for things such as volume, you want to watch out for things such as how the candles forming, and you want to watch out for patterns. Do you want to do, can anybody take a guess as to what is something else that you can look out for that can determine if something may be a good swing trade? There are no wrong answers. All right, I see time frame, I see price. Okay. Divergence. Okay. Order flow. Okay. All those are good answers. Catalyst. That's one. Yep. All right. So y'all giving some great answers. But this one answer that I'm talking about right here actually has almost nothing to do with technicals. And it's a part that kind of goes towards kind of more so psychology, right? So a big part of trading that a lot of people look over is the thinking part. Trading is the ultimate thinker's game, right? You can't always get so caught up on charts. You have to be able to think. You got to be able to process what is going on. Because though all of those things that y'all said was amazing, but it had nothing to do with what I wanted to, what I was trying to get at. And what I was getting at is, how is that same sector doing at that time? How is that same sector doing at that time? That is super important, because let me show you guys something, right? Let me show you guys something. I want you guys to notice right here. This is how I found Riot, right? So Riot, you can see Riot really started breaking out. Let's say around this candle is when the rally for Riot really started. So this is Monday, July the 3rd, right? So does anybody know a couple of stocks, or what sector is Riot in? And this is about to tie in together right here. So not only do you have, let's see, look at what we have. We have this thing breaking out of patterns, breaking levels, has a full body candle. The volume starting to increase down here when it's breaking out. Let's see what you guys said. Crypto. Everybody's saying crypto. It's not semis, not semis. We're gonna talk about semis too, but it's crypto. This thing really started breaking out around Monday, the 3rd of July. Let's take a look at crypto and let's see. You'll be able to see that Riot was actually very late to the party. If we look at Mara, notice I have the same exact type of things for Mara. I have my levels, I like to use my volume, and I like to use, the candlesticks. If you look right here, you can see this consolidation for Mara, and you can see this breakout. This breakout was as clear as day. You got a level break. Look at your volume. Look at the volume on this day compared to how high the volume is on all these days. And that's a question I get a lot too. How do you know something is high volume? You know the volume is high because you just want to compare the volume candle compared to the previous days, right? So you have breakout, one, breakout of this range. It passed this key level right here, right? 3, it's a full body candle pretty much, and it has a little bit of a wick at the bottom, right? So if you look right here, let's take a note at what day did Mara really start breaking out. Now, this is finna make sense in just a second. It's not always about the technicals. I promise you, it's not always about the technicals. Even though I am a big technical trader, the biggest thing that has skyrocketed my profits is being able to think and being able to process what's going on, right? So notice that notice that Mara started breaking out right here, which is June the 20th. Mara started breaking out on June the 20th, right? So let's see, on July the 3rd, let's see, Mara had already broken out from $10 all the way up here to around $12, getting close to 13 by July the 3rd. So while Mara was breaking out, stock in the same exact sector, Riot, was still consolidating. The 20th of June, Riot was still in this pattern. So this, seeing that I already had levels, I already had my pattern, it started up in my head, okay, I need to be watching Riot because it's in the same sector, but it has not yet taken off. So we take a look at Bitcoin, we look at BTC, and I'm just using this crypto as an example. We're gonna look at some regular stocks too. If we look at crypto, and if we look around where the Bitcoin started breaking out, Bitcoin started breaking out the same day Riot did, right? I'm sorry, the same day Mara did, getting those mixed up. Bitcoin and Mara was breaking out the same day, but Riot was lagging behind. That should be a huge indication that, hey, I maybe need to look at stocks in that same sector, because the thing is, if stocks in the same sector are bullish, that stock will also more than likely be bullish. So at this point, all you had to do was start waiting for your confirmations. And you can see from that point, it really just took off, right? So I know the next question would be, okay, well, how do you figure out how far it will go? You truly never know how far it's going to go. But the way that I like to determine how far do I think things will go is, for one, is your key levels. That's number one. Your key levels act as swing targets. My key levels act as swing targets. So if you look here, every level right here that I have that Riot was just hitting, these levels aren't made out of thin air. If we look back here, you can see that we in 2022, we in 2021, these are levels from in the past. These are levels from 1 to 2 years ago. I'm not just making these levels up. Then if you start looking, these are acting as my targets right here. Right? That's how I like to do my targets. My key levels act as my targets. But what you have to realize is that just because this is your target, that doesn't mean that you have to hold this point. Never feel like you have to hold up to a certain target, right? If you are getting into a swing and you get 50%, 60% in one day, please take some profits. Do not try to hold trying to get 400 or 500% every time. That's not how this goes. But a key note there is a lot of times my key levels act as my target. When you're trading and you're trading patterns, I don't know how many of you trade patterns, but when I trade patterns, things that act as your targets are, number one, your key levels, and number two, the top of the pattern can also be a target. You will notice that if in almost all of my examples, I will have a target or I will have a level at the top of the pattern. And it's the same exact thing here. But if we look, let's look at 1442 from the past. Now, I promise you, all of this stuff literally comes full circle. If we look at 1442 from the past, we can see that this was around the same type of key levels that it was back in 2022, 2021. These levels, these things just don't happen out of nowhere, right? It's happening because of past things that happened in the past. You have to realize that. I'm gonna give another example because a lot of people probably don't trade crypto. We're going to look at something else that was pretty good. What else had a great swing that was able to catch? AMD. AMD a while ago was a great swing, and I'm going to show you why. I'm going to remove my drawings, and I'm about to give y'all some exclusive game right here that took me forever to understand. So definitely make sure y'all paying attention to this part. I'm about to give y'all some exclusive game that took me forever to understand. So I like to trade a lot of breakouts, right? So that would be the patterns such as the flags, the pins, the wedges. And like I just said, I like to make my targets key levels or the tops of the patterns. That's how I make my targets. Simple as that. But you don't like to play the breakouts, you can also swing trade the pullbacks. So how do I swing trade the pullbacks is you have to be patient. But I like to either swing trade pullbacks by looking at trend lines, or I like to buy the dip when stocks pull back to breakout points. Let me say that again. I like to swing trade stocks when they come back to a trend line or when they come back to a point that they've had a nice breakout at. So if we look at this example right here, if you're looking at AMD, we can all probably agree that AMD, this really started going super parabolic, around after it got past this point. And it stalled out again. And it was stalling out right here. I'm going to show you. I'm just going to make a quick level here. It was stalling out around here and get past this line, and it blasted again. So it took off right here. Now, a lot of times what will happen is that a stock will take off and it will come back down and retest the breakout point. So this is a really great swing strategy for those who may not like to take breakouts. If you want to play the pullback, a way that I love to play the pullback is to play the retest of the breakout area. So if we look at the area that it broke out, it was right here. Notice AMD came up and AMD came right back down. Now, some of you that's been following me for a while, you know that AMD was on the watch list a few weeks ago, and you might have banked off of this AMD swing. Let me know if you're in the chat and you made money off of this AMD swing a few weeks ago. Let me know, because we're about to kind of going over this same kind of example right here. But if you look right here, it's nothing more than the same exact thing that we've been talking about. What are things doing at these key levels? So when it comes back and retest these levels, you can't just get in because you see something, at a point. You have to look and see what are the candles doing at this point, right? You have to see what is it doing at this point. You have to see how is the overall market doing right now and how are stocks in that sector doing right now. Those are the three things that you're going to have to always ask yourself. What is this stock doing at this point? What is the overall market doing right now? And what is the overall sector doing right now? Always ask yourself those three things, because you never want to trade opposite of the direction of the overall market and of the sector, right? That's one rule that I've made for myself. I always want to trade with the overall direction of the market and the overall direction of the sector. So let me tell you why. Last year, a lot of people got clapped. A lot of people got clapped last year in 2020 because they were not following the overall trend of the market. The overall trend of the market last year was going to the downside, yet everyone kept trying to buy the dip, right? So everybody was pretty much going against what the overall market was doing. Therefore, they were getting clapped, right? So if the market is bullish, things are going to be more likely to bounce at these levels that you set them at than to fall under. When the market is bearish, if something comes up, the retest is probably likely going to fail. That's a key thing that nobody's going to tell you, is understand the key, understand the overall market. You have to understand the overall market, especially when you're swing trading. Understand if we are bearish or if we are bullish. If we look at SPY, notice that we have not been bearish for a while. And I got a lot of, different lines on here. But notice we have been very bullish for a while, since like June, May, we really started being really, really bullish. So pretty much all the trades right now, you should be looking to swing to the upside unless we start getting bearish signals, because the overall market is bullish. So buying pullbacks work when you have a good trend, when you have a good overall trend. When you have things like this, when SPY is choppy, it's in a range, you can't get good moves because the overall market is not giving you a good move. Let me know if that made sense. The reason that swings were not working as good last year is because the market was super, super choppy. You cannot swing trade when the market is choppy. You have to swing trade when you have a clear direction. That is the only time that you should be swing trading. If the market is being very choppy for the past few days, just chill out. There is no rush. I promise you, there is no rush at all. Trade with the direction of the market. Patience pays. Exactly. Patience pays. Patience pays. Understand when you can swing and when you can't swing. Swing when the market has a direction. Don't swing when the market doesn't have a direction, because all swings are not going to go 300-400%, right? And a lot of times they are not going to do that. I'm going to show you guys, is SPY the best indicator of the direction of the market? That is what I use for my indicator of the whole market. I like to use SPY, QQQ, and the Dow. So those are my, market indications. And I am going to show you guys a live example to kind of show you what I'm talking about right here. So right now we've kind of been looking at things that kind of have already happened. And there's nothing wrong with that. But let me show you guys something that's happening now. Let me tie this in together for y'all. This is the Dow. The Dow holds the top 30 companies, right? So companies like Apple, Microsoft, Boeing, all those companies are in the Dow. Okay. If you look at the Dow right now, you can notice that I only had one level that I was worried about right now, and that was 353.51. And if you look here, you can tell that this was a super key level for the past 2 years. Over 2 years, it's been a super key level. All right. Boom. You already say, why are you showing me the Dow? Remember what I said to look for. When you're looking for possible swings, you want to see a run up, and you want to see what is it doing when it's pulling back. So what do you have here for the Dow? You have a run up. Oh, sorry. You have a run up right here. Now, this pullback, there's something really special about this pullback. Now, stay with me because this is about to make sense in just a minute. Does anyone know what this pattern is called that formed on the Dow? And note something else, this pattern took from November 22. This thing has been forming, this pattern has been forming since November of last year. Does anybody know what this pattern is called? Let's see what we got. The inverse shampoo. Exactly. We got the inverse shampoo. Shout out to TC. We got the inverse shampoo pattern, better known as the inverse head and shoulders. And if you don't know, this is a very bullish pattern. So why am I showing you this on the Dow? RJ, why is that important at all? Like, why do we have to know that? You need to know that because if you see that the overall Dow is breaking out to the upside, I'm going to be honest with y'all. If you didn't already buy tech, you didn't already buy those stocks that's heavily weighted in SPY, yes, I do think we're going to make an all-time high. But your time to buy was way down here. Your time to buy was at like 420. That was your time to buy. You missed it. You missed the dip on SPY, and that's okay. Because I'm showing you something now that the run for this hasn't even started yet. Right? You missed the dip on SPY. You missed the dip on tech. You missed it. Just gonna be honest with y'all. I'm telling y'all, you missed it. Right? But if you look at the Dow, we have not really broken out of the Dow yet. We are starting to, and I'm going to show you why that's significant. This is significant because if you look at the Dow breaking out, you have to start thinking, what stocks are in the Dow? Number one stock that a lot of people will think about is Boeing, right? And I know Boeing is something that a lot of you may already be in. And I'm not saying that Boeing finna take off right now because you don't know how long it's gonna take. But let's take a look at what some Dow stocks have been doing. Now, notice that this is the weekly time frame, right? So this candle represents a whole week, so we have a lot of data here. But if I look at the daily, you're gonna see the same exact thing. Looking at the daily right here, you see the same exact thing. You have a inverse head and shoulders breakout on the daily. So if we start looking at the Dow stocks, let's look at, I seen UNH. I seen someone say that one. Let's see what UNH has did this past week. I'm gonna go to the weekly so you guys can see. I'm not making this up. UNH this past week went from 479 all the way up to 515, 516. UNH went up that much. UNH is in the Dow. Another stock that's in the Dow is Microsoft and Apple. I'm sure I don't have to show you guys their chart. You know what they've been doing, right? see another stocks that are in the same type of index. You got American Airlines. American Airlines for the past few weeks has been breaking out. It just hit a resistance level last week. Look at Delta Airlines. Let's see. A same stock in the Dow breaking out, right? What you're going to notice when you keep looking, you're going to see stocks that are in this sector breaking out or about to break out. Someone just said McDonald's. Let's see what McDonald's looking like. Look at it here. It kind of has already broken out, but it looks like it may even try to break out again, right? Another stock that's in the Dow. Visa's in the Dow. Let's see what Visa looks like. Same type of thing, nearing a breakout point. So you will notice that a lot of these stocks that are in the Dow look like they may be about to break out very, very soon. And I want to just put that on your radar, because what happens is in the stock market, you have sector rotations. So people literally rotate out of certain sectors and go into another, right? So right now, the hot sector has been tech, and rightfully so. But it's not going to always be the tech stocks that are the hottest. The Dow may start running up soon, because we see on this larger time frame, you can see that it's saying that these stocks are nearing breakout points. So I'm not saying that we can't, it's about to happen right away, but it's looking like soon this could possibly happen. So let me tell you why that is so significant with Boeing. The Dow breaking out is significant with Boeing because Boeing has not broken out yet at all. Boeing is still ranging in the same range that it has been in since November. So knowing that Boeing has been in the same range since November, we see the Dow breaking out. That means that this breakout for Boeing can be epic because it's late to the party. The same way Riot was a great swing, it was late to the party. Boeing is super late to the party. We already see some Dow stocks are already breaking out near all-time highs. And look at what Boeing is doing. Look how far away Boeing is from the all-time high. If you don't know, before we had Tesla, we had Boeing, right? So Boeing was the Tesla before Tesla. It's super important. It's super important to understand what's going on. Everything is not always about technicals. I know you guys was expecting to come on here and just hear, oh, flag this, pattern this, pattern this. And it's yeah, I love to trade patterns and things like that. But if you ask people that see what I really post, I talk a lot about probability and the probability of things happening, right? So if you see more than one thing lining up, you need to start waiting on that play. All right. Let's see. Target points. We just talked about target points, and they act as the key levels. We have a key level at Boeing at 233. We got one at 255, one at 308. Let me show you guys something pretty cool. Another way that you can try to find swing targets is to use the length of the previous breakout. So if you look at Boeing right here, it had a very nice run up, right? A nice run up and a consolidation. But notice that this run up was from 119 all the way up to, I'll stop it here, 216. So this was almost a $100 run up. A lot of times these things break out during that same, this same type of rate. So this is saying that Boeing has the possibility to maybe break out $100, and it's late to the party. So a lot of times what you can do is you can use the length of the pole to try to find what is the place that it can break out. And if you're looking at this using the length of the pole, I put where the breakout point would be. The breakout point for Boeing would be right here. This is putting Boeing right back near all-time highs. That's just by the length of the pole. Now you can back test that yourself, and you will see that a lot of times these breakouts happen with the length of the pole. But like I said, the main way that I love to use my target points is key levels. That is my main way to do it. So a quick recap, real quick. What I would went over what I like to look for. I like to trade using patterns, volume, how the candles are forming, and using confluence, using those things together, and how the overall market is doing. That's how I like to find my swings. All right, what kind of contracts do I look for? Sometimes I get longer term contracts, and sometimes I get very short term contracts. Note that I am a risky trader, right? So my quote unquote long term for me is like 3 weeks. That's just me. Notice again, I said this ain't financial advice. I'm telling y'all what I do. So don't go trying to do what I do and think you're finna come get me, because I'm letting you know this is what I like to do. All right. So another thing that I want to talk about is how can you possibly use shorter term contracts to get huge returns when swinging. There are some things that I love to look for that can give you a huge return on a short term contract. And there needs to be a very, very specific type of things going on. A lot of times, you have to determine how far can this possible breakout take you. That's number one. Before you get into a swing, if you're using key levels, you need to see what is the possible reward right here, right? Because on something like Boeing, we can see that these key levels are pretty far apart. So all of these are like $20 plus. I'm not really worried about this as much, but let's take a look at something that maybe has closer. Let's look back at AMD. We're gonna look at something that has closer swing targets. I'm gonna show you guys what I'm talking about right here. If we look at AMD right here, I can say that we have a key level at right at 109, right? So if I'm looking for swing, well, number one, let's chart AMD up real quick. And I can see this because I've been, like I said, I've been doing this for a while. If I'm looking at AMD, I can see a downtrend. And notice, where did we do our downtrend to? Our downtrend came right back to the breakout point. And now we have a quote unquote pullback. Does anyone know what this pattern is called? What is this pattern called right here? Yep. This is called a bear flag. This is called, yep, y'all are right. This is called a bearish flag. Okay. Now your question would be, okay, I see the pattern. How far do I think this thing can go? Well, you number one have to know, where are my levels near this pattern? Notice a lot of times what you're going to see when you're swinging, you're going to notice, and let me know if you guys use patterns at all. Let me know if you had the same exact thing. You will see something about the breakup pattern, but you will have a key level right by it. Let me know if y'all have seen that before. Like, just like this example right here. Like 109 is like a key level, but you have it like breaking a pattern right before it gets there. Let me know if you guys have seen that before. I don't know how many of you trade using patterns and key levels like I do, but if you have, I'm sure that you've probably seen this before. You say, yep, just last week, seen it many times. So you have to start determining how far you feel like something can come down, because you're going to see this a lot, right? So you have this key level for AMD right here, but you have to notice too, you also have a level that is pretty tough right here at 107.28. Now, under 107.28, this is when it starts getting good. Under 107.28, if I'm looking, I'm using my past data right here. If I'm looking, the next place I feel like this thing can fall, I'm following my cursor here. I'm coming down 104. That would be my next place. So this is an example of things that have closer kind of targets, but something like AMD, you have to realize that a $2 move on AMD is actually pretty good. It's not the same as like a $2 move on, Boeing. A $2 move on AMD can actually give you a nice little return. Yep. Hey, someone just said I started using mixing patterns with smart money concepts. Dope mix. Yes, it is. I'm gonna do a class in the future on how I've started doing that too. I just want to, use it a little bit more first, but that is dope. But a lot of times you're going to start seeing things like this. You're gonna see these patterns forming, and you're gonna see levels right by. And the reason that you're going to see that is because notice that where this started forming this pullback, MD, this is where it started forming, this support. The pullback here turned into a support right here. So when it's coming back down, notice that we talked about earlier, these same levels act as a support in one place and a resistance in the other. These same levels are going to be a level again when it gets here. So you might say, well, how do you figure if you want to swing it? This right here, you have to start looking at more things. What sector is AMD in? What sector do y'all think AMD is in? I'm sure a lot of y'all already know because y'all probably traded. Semi. All right. Let's see what the semis look like. Now notice I haven't looked at all the semis yet. So I'm looking at this live with y'all. This is a workshop, so hey, it is what it is. Let's see. Let's start thinking about what we got here. So we have NVIDIA. NVIDIA right here. We see NVIDIA has started coming down. And at the point that it's at right now is actually in the middle of a gap. And the next level that I have is 434, which that is a older level that I've had from in the past. But that is the next key level that I have. And I feel like that is pretty accurate. So I'm looking here, there's nothing really in between here. So it's 434 and it's in between the gap. So I would say it's still kind of bearish, in my opinion. Let's see. So we have NVIDIA, who looks like they could possibly start coming down. Let's look at the overall sector ETF. We're gonna look at SMH. Notice that SMH kind of looks the same, just like NVIDIA. I have this trend line here that I've had for a while, and it looked like it may come back down and retest this. So it looks like it may still be bearish. If we look at SPY, if we look at SPY, SPY does not quite look bearish yet. But if we start getting under, 450 and start coming back down here, we could possibly, look for a bearish type of swing on the overall market. That's kind of how I like to align these things. I want to see how are these stocks doing, how's the sector doing, how's the overall market doing. Like after I analyze that singular stock, then you have to go up and see. If you don't see things lining up, then maybe it's not a great idea to take that trade. That is what I would look for. Let me show you guys an example because I did want to show you guys how I like to use trend lines to find great swings too. Let me show you guys the MU example. Now, this is a swing strategy that is super, super simple, but it can fake you out if you don't know what you're looking for. And I'm gonna take this off because we're not gonna talk about this today. But one thing that you can look for is called a 3 trend line touch rule. This is something that you can use to buy pullbacks. And this works on any time frame, but this is a trend line trading strategy that I love to use when I swing trade, right? And you have to use the exact same type of things that we talked about before. You have to be looking at how that stock is doing at the point. You have to see what are those stocks doing, that's in that same sector at that same point. The 3 trend line touch rule is exactly what it sounds like. It's the third time that a stock comes back and touches on a trend line. A lot of times on that third touch, it's going to bounce, right? So if we look here on MU, I already got a label for y'all. This is the first touch. It came up, came back down. This is the second touch. Notice on these 2 touches, every time that it had started, coming back up, it had a violent up move. That's what you want to see. On your trend lines, you want to see violent up moves. So when it came back down again, and it got to this trend line, some of you may remember when I was calling out the MU swing. Now, swings, if you're looking to buy bullish swings, You do not want to buy just because it touches a trend line or just because it's past a support or resistance. That is not how you do it. You have to see how are these candles forming at these points, right? When you look here, when it started getting to this trend line, notice that you start seeing bullish patterns right here. You start seeing these long green candles here. You don't necessarily have a lot of volume, but you're seeing that selling volume is slowing down. You start seeing that here. On the volume is getting pretty low, especially on this selling candle. But the next day, you have a candle that pushes it all the way above. And I'm not really gonna get into entries and things like that on here. We just kind of got like the basic surface level. We do another swing class. We'll talk about more so like entries on them and things like that. But we're keeping it basic right now. You use those same type of principles when you're trying to enter a swing trade that you would use on anything else. You want to look for how those candles are forming, how the stock's doing in that sector, and how's the overall market doing. So if we look at, just take this day in particular, on July the 10th, if we look at how stocks in that same sector was doing on this same day, this can help you and give you more confluence. If you look at AMD on the 10th, MD had a very bullish candle as well. The next day, it did not play out like MU played out. But if you was just looking on the 10th, the day that MU gave you the bullish confirmation, AMD also had the same type of bullish confirmation. Let's see if NVIDIA was also bullish on that day. This is how you have to line this stuff up. And they're not going to be like this every single time. If we look here, NVIDIA was not as bullish this day, but you did have AMD that was bullish as well that day. So you had a very bullish candle. You had one, you had the 3 trend line touch rule, that's 2, and you had another stock in that same sector bullish. That's 3 things right there that could let you know, okay, this can be a great swing. And just like we talked about before, what can be our targets? Targets can always be key levels. Notice, where did this stock come back up to? Right here. Came back up to this key level. Notice how strong this level was. This has been level since last year. Things always come back and retest these levels. When they pass one level, they come back and test the next one. That's what they're going to do most of the time. That is just a couple of examples. Let me see, was there anything else that I felt like I missed? Let me check the agenda. I said I didn't want to go too deep into it today because I didn't want to lose people. We're going to do this again, and we're going to talk about more precise entries and things like that. I know I did want to take like 15 minutes and have time for questions as well. So I'm going to, let's see. If you have a question, you can raise your hand and I can try to bring you up and we can answer some live questions. Let's see. Oh, how do I do that? All right, here we go. Got a question right here. Okay, I think I have to take everybody off of mute first. Here we go.
Can you hear me?
Oh yeah, I can hear you.
Yeah. Okay. First of all, thank you for this. This Zoom is really, really good, and I'm learning a lot from you, just going over everything. So I'm new to swing trading, and the question that I have is that when you're holding a position, what's the percentage you should let it go to before you say, okay, it's not going in my favor?
Oh yeah. That's a really, really good question. And I don't know how I missed that because it was definitely on my agenda to talk about. So I'm gonna share my screen again, and this is going to answer it. So a lot of times when I'm swing trading, I don't go by my percentage. And like I say, y'all, like this how I do it now. I like to use the chart for my stop losses. And I'm going to show you guys an example right here. I'm gonna show you guys the same example on MU, right? So MU, if you're looking at MU right here, if I was to get in MU, if I was to get in here on this day, I would set my stop loss if this stop was to break below this trend, right? So I don't really go off of a certain percentage, me personally. I more so do my stop losses by the charts. And the reason that I do this is because sometimes a stock can hit a certain point and it can come right back. And a stock can consolidate and you could still be in a trade. Like if I was to say I want to get out of, let's say I got in right here on MU. I got in at 61.12. And let's say for 4 days, the stock consolidated, right? So that means it was just going sideways for 4 days. You would probably be down on your contract, but by the charts, you are not out of the trade because it really hasn't went anywhere. It hasn't went down and it hasn't went up. So I like to do my stop losses by the charts. If I'm playing something like this right here, I'm going to set my stop loss right under this trend line. And if I'm trying to play a breakout, let's say what's something that has a nice breakout or something that may break out soon, we can use that same Boeing example and I can give you guys a live look right there. Boeing for sure breaks out. This is a for sure breakout above this point, right? So my stop loss for Boeing is if I get in above this point, let's say Boeing is at 25, right? So it would be above, my stop loss would literally be a little bit below, you know, this line right here. And I more so do that because it can consolidate at this point and you're really not out of the trade. Now that is a more advanced way. You also have some people who do like, 30% stop loss, because that's what I used to do. I used to do like 30 to 35% stop losses. But that is how I shifted to start doing mine. I do mine off of the charts and I set it a little bit below of where I want to enter. I hope that makes sense. Let's see, we had another question. Let's see, Rotel. Let's see if it works here. If it works.
Yeah.
Oh
Hi,
yeah.
RJ.
Hey, how you
Thank you
doing?
so much. I appreciate it. So they say that when if you have a good trading plan, that when you enter a trade, you should know where you're going to get in and where you plan to get out,
Mhm.
So if you have, using Boeing for an example, if you have, you talked about a possible expected move of a certain amount. So in that case, you were using an example of $100. If you, and you were saying, don't necessarily try to take, the full 100% of the expected move. If you're trying to take a certain percentage of the expected move, how do you set at what amount do you set your premium, your limit order to get out? So let's say you got in at $2 and the expected move is, I don't know, $100, but you want to get out at say 60% of the $100. What should your premium, your targeted premium be to exit that trade? Does that make sense, the question?
It kind of does. You saying like if I get in, I buy a contract for $200. If I expect the stock to go up $100, kind of like where would I start settling for like the or like if the stock get to this point, I'll be like, okay, I'll go ahead and take profit here instead of holding.
Right. So I'm saying, if you expected to move $100 and you got in at 200,
Right.
but you're going to take a certain percentage of that $100 move, 60%, 75%, whatever. What would your limit, your exit limit be?
Okay. Yeah, I got you. That's a great question. And a lot of times I like to do that by You know, I keep it seems like I said a lot of the same thing, but I always do it based off of like the overall market. So as long as the Dow is still bullish, I would still hold this, right? If this thing starts breaking out, as long as the overall like ETF is still bullish, I would still be holding, because I know that this thing can't move higher if the Dow doesn't move higher. So I like to kind of hold mine, you know, based off of what that sector is doing and what their overall ETF is kind of doing. That's kind of how I like to determine, you know, how long I feel like I would want to hold mine. It's not going to always be perfect. You will never have a perfect entry and a perfect exit, but there are just some things that you would want to look for that can help you kind of gauge it. Because in a swing trade, let's if we look like for an example right here, for example on SPY, if you was to get in a swing trade on SPY on, let's say this day right here, let's say even before that, this was the breakout day. If you was to get in a swing trade on SPY this day and hold, of course, yes, you had red days, but overall you would probably be up insane. And this really wouldn't be a super good example because it came down a lot here. You know, you wouldn't want to hold this far, but you're going to have red days on a stop. That's something I like to do. I like to always, number one, try to see that trend, right? So a lot of times you will be able to make a trend line on the larger time frame of that stock. A lot of times if a stock is holding a larger trend line, it's still strong. So a lot of people, when they analyze, they like to use trend lines to determine if a stock may be about to turn bearish or bullish. You know, if it breaks a trend line, it's going to turn that opposite direction. So those are a couple ways that I like to do. I like to, number one, always go off of the overall market, and number two, I like to use trend lines, especially when I am planning on swinging. But it's no perfect way to do it. That's just ways that I do mine. It's no perfect way to do it because you truly never know how far a stock is going to go. You truly will just never know. I hope that kind of makes sense a little bit. Yep, no problem. Let's see. Anyone else has a question? Let me see. How do I unmute everybody, or not unmute everybody, but let's see. Do you use higher time frame patterns? Yes, I use the higher time frame for patterns, and I use that because the larger the time frame, the larger the move. If I see a bull flag on a daily chart or a weekly chart, I'm expecting a lot bigger move if I would see a bull flag on a 5-minute or 1-minute chart. Because you have to take that psychology of, okay, you know, if you see something breaking out, it can break out for maybe like 2-3 candles straight sometimes without having a pullback. So if you see something on a 1-minute chart, that means that it's breaking out for 1 to 3 minutes straight. If you see that on a daily chart, it means the exact same thing. It's just a different time frame. That means it's going to be breaking out for 1 to 3 days straight, right? So that's how you got to start shifting it whenever you see these things on these larger time frames when you have these swings, right? So if you see something breaking out on the daily chart, you see it breaking out of a pattern, and you see that it has, let's say something like Apple, and let's say it had $5 until the next key level, you would want to swing that because one, you have a bullish confirmation of it breaking out of a pattern to the upside, and you have that possible reward of $5. You have to kind of always weigh out, what is my risk to reward? Is it worth taking? Because what you don't want to do, you don't want to, number one, swing trade something that's ranging. You want to swing trade things that have a solid direction, and you want to keep swinging in that same direction. And two, you want to always, it just slipped my mind. You want to always swing in the direction of the stock. You want to always weigh out how far you think that stock can go. And you can do that by looking at your key levels. one thing that I love to do, and the reason that I'm so patient is I only swing trade things that have a nice amount of room to go up, right? And what you have to notice too is that you don't have to always swing. You can turn a swing into a day trade, right? So like if something like you get 30, 40, 50% a day, don't feel like you got to swing that if you don't want to. It's something off the table. Kind of like the same thing we were saying earlier. But yes, I do. I love using higher time frames. I use higher time frames for my day trading and swing trading. No matter what, I'm always using higher time frames. Let's see. If anyone else has a question, you can raise your hand and I can unmute you, unless I can find a way to unmute everybody right here. Let's see. Stop share again. Want to come here. I'm about to unmute, so whoever has a question, you guys can. Okay, everybody should be able to unmute. So if you do have a question, you can just you just come up and ask. Any question about swing trading? You say you can turn a swing to a day trade. Yeah, that's what I said. You can turn a swing to a day trade. That's exactly what I had did with Lyft the other day. I liked Lyft for a swing trade, but I turned it into a day trade because for one, the overall, I always go back to the overall market all the time. The overall market started turning very bearish. That is the main reason why I turned Lyft into a day trade for those that was seeing that in BWSO and in my little chat too. You can always turn a swing into a day trade. If you have a breakout, this is a good question. If you have a breakout on a daily pattern, do you wait for that candle to close, or is there a little bit of anticipation? It really depends on the time of day and what you want to see, right? So the two main strategies that I told you I like to trade the breakouts, and I like to trade the breakouts and retests, right? So sometimes a stock can break out of a key level at 9:30. Like a lot of times a stock may float right near a key level during the day, and as soon as the market open, it pushes up and it comes back down and retests. I typically like to wait on my swings. I typically like to get in them. Honestly, I really like to wait until after lunchtime if it's more so of a anticipation type of breakout. But if it's one that has a lot of room to the upside or a lot of room to the downside, like if I see one key level and the next key level is a nice bit away, then I will enter that swing earlier because you have a lot of potential for it to go up. But it all comes down to how much potential profit do you see in that? What are my main time frames to use? For day trading, I'm mostly on a 5-minute. For swing trading, I love to use the 4-hour and the daily. After you see the stock meet your criteria to swing, how do you go about finding entry points? Do you mind going over that process? Yeah, I can show you a little bit of it, the very basics of it. It's literally, okay, I'm gonna show you guys a couple examples right here. Really kind of just one example, really. So these key levels don't act as just profits. They can also be entries as well, right? Because something that can happen is just like we said earlier, a pattern, if something can be breaking out of a pattern and get rejected at the level right above or below it. A lot of times what I like to do, I like to enter my swing when it breaks that key level, because for one, I'm a breakout trader. So if I see breakouts happening, I like to go ahead and get in, right? And that could be more risky. But what you see a lot of times is you will see something breaking out on the larger time frame, then you can go to the smaller time frame and find a smaller breakout to that same side. Because you got to think about this from a different kind of perspective. If you see something breaking out on the daily and it's going up, that means that if you was to come down to something like a 5-minute or an hour time frame on a smaller time frame, you're going to be having bullish type of setups and bullish type of patterns and things like that on the smaller time frames. Like, I want you guys to take a look at that kind of stuff over the next, week or so. When you have things breaking out on the daily, weekly, things like that, when you come down to the hour time frame and the 5-minute, there has to be something pushing it up, right? So that pushing up and making these big candles like this are the breakouts happening during the intraday. So a lot of times I will enter when they break out of these, and you really don't want to be scared of taking a breakout early, because if you get into something during the day that's breaking out, it's already breaking out on a larger time frame. So at worst, if you get in early, you really would have a better chance of either having a very small loss or a huge win. Because let's say if you get in something, let's say the breakout is at 12. The breakout is at the stop price 12, and you get in as soon as it gets past 12. In my eyes, my stop loss will be a little bit below 12. Whereas someone else who may wait to the end of the day, if they get in and the stock is at 12.40, 12.50, then that stock has already moved up 40, 50 cents, where their stop loss could still possibly be right under 12. They have a larger margin for losses. So I like to take mine on the breakout of those key levels. Let's see. Do I ever dollar cost average if you still like the bigger time frames? No, I don't. I don't average down. Sometimes I do like to average up, because I trade a lot of things that have like momentum, but I never like to average down on my options. That's just me. Something that I do love to do is I like to swing trade something, and I like to day trade that it's same exact thing. Now, let me tell you why this works. It goes back to that same exact thing that we were just talking about. If you see something on a daily chart breaking out, let's take Riot for an example, because it's been the best swing example of the past, couple weeks, honestly. If you see Riot breaking out on a daily chart, that means that it can break out for the whole day. What's stopping you from swinging and day trading if you already have a solid direction? It's breaking out to the upside on the daily, so the solid trend is going to the upside. What is stopping you from day trading that same stop? Because remember what I said, when things are breaking out on these large time frames, they're also breaking out on those smaller time frames as well. When you see something breaking a bull flag on a daily chart, I guarantee you, if you look at a 5-minute, you're probably gonna see it breaking bull flags and breaking smaller levels on that 5-minute, on 15-minute, things like that. I like to take that approach. Now that's a true gem for me, because a lot of people don't know that. But I love to do that. If I'm in a swing on something, I would like to day trade it the same way. And I like to do that because, for one, it can minimize my risk even more. Because if I catch, like, swings can reverse on you. If I make, let's say, if I'm up $200 on a swing, but let's say I day traded it that same day with my swing contracts, I day traded some contracts and made $200 as well, day trading, this trade is pretty much risk-free, right? So that's why I like to take that approach instead of dollar cost average. When you see your swing is going in the same direction, you project it. Do you use the same strike price and expiration? No. I like to get contracts that are a little bit further out of the money. And by a little bit further out of the money, I just mean like further than my contract that I had. Like if I was to get something like Apple and I had a 195 call that got to be in the money, I might buy some 197s or some 200s. It might be for that same week, but I want to get some, a little bit cheaper ones, because I want to hold those just in case this thing starts to go parabolic and I decide to cut my initial ones. Y'all asked some really, really, really good questions. Let's see. What else did I say? I hope I don't miss anyone. Mr. Lair said, can I briefly go over the bearish flag pattern? Oh yeah, for sure. We can look at that real quick. The bear flag pattern is simply noticed by, it's the exact opposite of the bull flag. A bear flag is noticed by seeing a significant move down and a stop, and then the two trend lines are going in the same direction diagonally to the upside. It's like a bull flag, you want to see it come up and then pull back to the downside. A bear flag, you want to see a significant move down, and the pullback, quote unquote, or the pull up would be to the upside. That's the bear flag. Let's see. I don't want to skip nobody. I got to go up a little bit. When you hit your profit target, do you close out completely, or if you think it could go higher, you may leave a runner or few? Yeah, you want to leave some runners. You want to leave a runner or two. That's what I always like to do that. What made me swing lift? That's a good question. I can show you guys this example right here. And let's see. Lift, if we look at lift right here, what do we have? We got a bull flag pattern, run up, made the pattern, broke out. We had that same kind of thing again. Run up, bull flag pattern, and broke out. Now, I did turn lift into a day trade here, which ended up being a good idea. But let's talk about why was it initially a good swing idea. It was a good swing idea because, for one, it was pretty much having like a peekaboo outside of this bull flag, and it had a peekaboo out of this bull flag, and it also was near key level. Now, not only that, but it was also near a gap. Now, how big is this gap? This gap goes from 12 all the way to 16. This is $4 worth of straight gap right here, right? So above 12, this thing could, possibly go to 16, which got up a little bit, went pretty much to 12.50 and came back down. But look at the risk to reward right here is insane, right? And this is a small stop. This little, we got in above 12 and we got out around like 12.43, something like that. And, the contract was up minimum. You was up, if you got in this, you was up minimum 25-30% easily. No, I am not in lift right now. I turned that into a day trade because the overall market was starting to be bearish. I'm not in lift right now. But that's a good question. That's what I was seeing with lift. And if you look at Uber, remember I always talk about look at those stocks in that same sector. You notice that Uber has been bullish, right? So the stocks have already been bullish. The same stock in that same sector has already been bullish. So lift kind of late to the party. Let's see. I don't want to skip nobody's question. Let's see. Ones that I didn't answer yet. How do you determine key levels? You determine key levels by looking on your daily or your you want to look on your daily or your weekly, and you want to find places where the stock has had trouble going below or above. How could you tell if the market started to go bearish? Can you show that? Yeah, so you would literally want to use the same type of confirmations. So to determine if things are bullish, you would want to look at the overall trend, right? Notice that the overall trend for Uber has been upward. So you can literally use that. A way that I like to see if things may be about to turn bearish, at least short term, is to see what do they do at key levels. So like something like SPY. Let me show you guys this right here real quick. Let me show you guys this, and I may have to take some of these. I know these are my day trading levels on SPY. Take some of these lines off. One thing that I will say is you don't want to try to guess the top or the bottom. Never try to do that. Always keep playing with the trend. Don't try to guess the top or the bottom. You want to react. Don't guess it, react to it. Because if you're trying to call the top or the bottom, you're probably going to get killed. You just want to react. So the way you kind of want to start looking at things turning bearish, you want to look for things like bearish hammers or things such as it rejecting a trend line or, a lot of selling volume. You want to look for things like that, but nothing defeats the overall trend, right? So if we look at SPY, like just for an example right here, Yeah, we got some red candles in SPY, but truth be told, we are insanely bullish on SPY still, right? Look at this trend. And I'm gonna go ahead and tell y'all, if SPY pulls back and it gets back down to this trend line right here, I'm buying calls. Because what would this be? This would be the third touch. You know, let's say if it's somewhere around here, I don't know how long it's gonna take, but it's gonna eventually retest it. That would be the third touch on SPY. So you don't want to try to call the tops, you just want to react. Y'all asked some really good questions. Does anyone else have any questions? If you wanna ask it with, you know, okay, you can unmute yourself. I did change that setting, or you can just type it in the chat. I have asked some really good questions. Let's see. Is this a bull flag? No, this is not a bull flag right now. So say, how do you determine your initial strike price when you enter the swing? I'm glad you asked that. For swings, you don't want to have a higher theta than you do delta. You always want to make sure your delta is higher than your theta. That's number one. Especially when you're trying to swing, right? There are some instances where I do swing more risky, but you always want to make sure your delta is higher than your theta. Why do I have so many levels charted? Because these are my key levels. These are my key levels right here. That's why I got so many levels. This is just how I trade. Like I said, you ain't gotta trade how I trade. It worked for me. As a new trader, do you recommend using smaller stocks or the BA and Tesla type stocks? I suggest using smaller stocks. So those would be stocks like Coca-Cola. AMD has very affordable contracts. Apple has affordable contracts. American Airlines, Delta Airlines, United Airlines. Those stocks like that have very affordable contracts. So I definitely suggest ones like that. Oh yeah, no problem, no problem. Anybody else got any questions? If not, then I just want, if you could, what was the biggest thing that you probably learned today? Or what's something that you learned that you didn't know today? What is something that you learned that you didn't know today? How do you consider open interest when picking contracts? If it's low OI, or are you still buying? I don't really pay attention to open interest a whole lot, because I mean, I'm more so looking at volume than open interest, because I don't do selling, you know, the contracts at all. I'm always like just buying. I don't do the selling. I feel like open interest, you want to take a look into that a lot heavier, like if you're trying to sell them. For me, I like to look at how my volume is on my contracts more so than open interest. It says, wondering if you can demo how to find a key level on a stock without all the lines. So I mean, look, you don't have to come and plot everything. I keep these lines right here because I want to know where my levels are if I come back down. A way that you can chart without having all the lines, you can literally start charting this from where the stock is now. Like if I didn't have all these lines right here, you could literally start, what is SPY at, 452? You can plot the first 3 levels on your daily or weekly to the upside and your first 3 to the downside. And then if they start hitting those, that top third level or the bottom third level, you can just change it from there. You don't have to plot all these lines. And focusing more on the stocks in the same sector. Yep, that's a key one. Learn to be more patient when seeing and waiting for these setups and not force or rush things. Yep, that's the thing, because look, you can take one A plus trade and you can make more money on one trade than you can on 10 B plus trades, right? You only want to wait for A plus setups. You got to be patient. You got to be patient. It's always quality over quantity every day of the week. Do you use any leaps? I don't trade leaps. It's just because I hate holding for that long. Like I like to do shorter term trades. I like to get into things that's gonna give me an explosive move rather quickly. That's mainly why I love to trade breakouts, because I like to get into things that are gonna give me a solid move in a short amount of time. So I don't usually get leaps, but if I was to get leaps, then yes, you use the exact same things. Like for leaps, you want to look for extreme dips. So I can show you something here that if I was to get in a leap, this is the kind of stuff I would be looking at right here. If you was to look for leaps, you would want to find things that has had a very significant drop. So something like Disney. If we look at Disney from the weekly chart, we can see that Disney was all the way at 190 and now it's back at 87, right? But notice that 87 is right near a key level from the weekly that has been a key level since 2014. So we are at 2014 levels right here, besides this COVID drop. You know, some people don't count the COVID drop, some people do. It is what it is. But it's the same as that type of thing. You want to find extreme dips if you're looking for leaps. You want to buy them on extreme dips on companies that can withstand, you know, so you want to look for things like this. This is another good question. Why do you leave all your old previous levels up on your chart? Does that help you train your eyes or save you time going back? It saves me time going back because, like I said, like these same levels are going to be levels to the upside and they're levels to the downside. So if SPY starts coming down, I don't have to change anything on my chart. I already got everything I'm looking for. I learned so much looking at the stocks and overall sector and the overall market. Oh yeah, I appreciate you. I appreciate you for hopping on. That's what I was looking at, VZ. Yep, VZ is one that looked pretty good. I was seeing that one. Yeah, some really, really, really good questions. I'll do one or two more questions if anyone has any. I did go longer than I wanted to go, but hey, it always ends up like that. I always end up going longer than I plan on. Let's see. Oh yeah, I appreciate you. Yep, weekly watch list is gonna be happening tomorrow at 9 o'clock. Y'all know how we do. Every Sunday. Oh yeah, thank y'all. I appreciate y'all. I appreciate everybody for hopping on. Thank y'all for hopping on. I appreciate y'all. Yep, and like I said, this is going to be recorded, so I will drop that recording. I'll probably put it on YouTube. So yeah, I'll put it on YouTube and I'll drop the link in the Discord. So you guys will have it, and the people that wasn't able to get in, they'll get the recording. So I appreciate everybody for hopping on. If you got any questions, feel free to message me on the back end. It's only 7 o'clock, so I'm gonna be up. So I mean, hey, just hit me up. I appreciate y'all. Let's see. Yep, I appreciate you. I appreciate y'all. Man, y'all be showing love, man. Y'all show mad love all the time. I appreciate y'all. On YouTube channel, yeah, I'm gonna drop the link. I'm gonna drop the link to it. So yeah, you'll get it. You'll get it for sure. Appreciate you. I appreciate you. Appreciate you hopping on. We're gonna do this again. We're gonna definitely do this again because we didn't get too in depth. It was still kind of surface level. Because I know we got a lot of people that it's not super advanced. So yeah, we'll talk. Yep, thank y'all. Thank y'all. I'm about to close it out. Like I said, if you got any questions, just hit me on the back end. I appreciate everybody popping on. I hope y'all have a great night.